Guys, hello. Welcome to the fourth episode of NGMI Trades. Hope you're all well. Hope you've had a great week. Slightly different formula today. So, fun stuff to start, macro stuff after, then we'll end with the result of the gutter giveaway. So, 1, DeFi play of the week. 2, passive income miner play. This is the fun stuff. This is the stuff I haven't touched actually for a couple of months, as we've gone through this very, very unstable period. Then we'll move on to the standard weekly macro roundup, which you are now used to, and then the result of the gutter clone giveaway. So let's get into it. DeFi play of the week. So 10MB Finance, an algorithmic stablecoin pegged to USDC. Now, I've stayed away from the DeFi space for 2 months now with the current choppy environment. Just hasn't felt like the correct move. But I like this project. I am going to invest, and I'm going to tell you why. But before I do that, let's get a quick rundown from the horse's mouth. The team have got a 2-minute video which gives a very good, quick overview of what you need to know.
10meg.finance is an algorithmic stablecoin on Kronos network that is pegged to 0.1 USDC by 2 mechanisms, seigniorage and fractional collateralization. You can receive the yields of risky DeFi investments, but with exposure to USDC instead. 10meg Finance also has other all-new features like NFT staking for bonus yield. In seigniorage, similarly to Tomb Finance, when the 10meg price is above peg, the supply expands, and when the price is below peg, the supply contracts. The supply contraction happens via bonding. 10 bond can be purchased for 1 meg when the price is under peg, and redeemed for extra 10 meg when the price has risen back above peg. In fractional collateralization, similarly to Iron Finance, 10 meg can be minted. The minting price is slightly less than the spot price when 10 meg is over peg. 10 meg can also be redeemed for 0.1 USDC worth of tokens, split between USDC and 10 share according to the currently available collateral. On their own, Tomb and Iron Finance failed to maintain the price peg, but combining the 2 protocols compensates for the weakness of each. Let's examine how. In Tomb Finance, there is no immediate reward for buying the bond token. Other people must restore the price peg so that profit can be redeemed. But redemption for 0.1 USDC worth of tokens gives an immediate reward for restoring the peg. Iron Finance collapsed when its share token, Titan, dropped to 0 price. This happened because Titan's time-weighted average price timeframe was too long. We have shortened this from 10 minutes to 45 seconds for improved responsiveness. In addition, newly minted 10 meg is distributed to 10 share stakers, giving 10 share an intrinsic value source. These features make 10meg.finance the first protocol of its kind. Welcome to 10meg Finance.
So my big takeaway from that video is the dual peg enforcement. This improvement on the vanilla Tomb fork should make a big difference in terms of how the protocol performs. Now, I want to caveat this immediately by saying I'm not a financial advisor. This is not financial advice. And my biggest takeaway from this current market cycle is that from a personal perspective, I overinvested in DeFi applications. Now, there is still massive money to be made in DeFi, but I believe you should only invest what you truly can afford to lose. It is different for Bitcoin and Ethereum. They have, in my opinion, they have I think they'll be around in perpetuity, essentially. Whereas the majority of the DeFi space, over time, goes to 0. That is the long and short of it. However, you can still make massive money. Now, I am investing in 10MB Finance. I have a whitelist allocation, which the pre-sale starts on the 28th of June. So I will be taking that up on the 28th. The 29th of June is when the public pre-sale starts. I will then be applying to buy more in the public pre-sale. That is on Wednesday, the 29th. and then on the 30th, the pre-sale ends and liquidity is added. Now, in terms of how you play this and in terms of strategy, it is obviously completely up to your own risk tolerance, what you're looking for. But I always say that if you are happy with the number in front of you after liquidity is added and the protocol begins, take it off the table. However, it is also worth noting that, and you read the white paper, don't just listen to me, read the white paper, see what you think. They are offering fantastic yield on staking, but yeah, see what you think. But at the end of the day, if you're happy with the number that you see on your telly, I always say take it off the table. But I'm risk averse, so that is my final take on this. 10 MB finance, it looks great. I am going to get involved. All right, guys. Next, this really is a fun money play. This is a miner. So for those of you that don't know what this is, essentially how it works is it's a locked deposit scheme where you earn interest on your capital. Let's say you put in £100 or $100 or whatever. That $100 is then locked in perpetuity forever. You ain't getting it back. However, what you are getting back is an interest rate on that deposit. So if we go down to the details, the project claims circa 8% ROI daily. If you work on that basis, you are looking at, so look at that, 12 times 8 is 96, 12 and a half days based on that calculation for how long it takes you to get your initial back. Now, I've used miners in the past. They've been great fun. Some have been profitable, some have not. But the majority that I've used have, and it has taken me somewhere between 2 weeks to a month to return the initial capital, and then from that point onwards, everything you earn is money in your pocket. So, as I say, this is real fun money play. Only really get involved if you can afford to lose it. I like the look of this. I invested 2 days ago, but look, it's a tiny project. 675 deposits. They've got $73,000 under the contract balance. Yeah, it's a bit of fun, but I'm in, and we'll see how we get on. 2 things I just want to bring your attention to, but please do read the white paper yourself if you decide to go for this. There is a entry and exit fee of 6%, so you need to put that into your calculations. And there's a mandatory compound time of six units, or 6 times. Bear in mind, if you try and withdraw before that, you will be charged a 99% tax. So please make sure you read the white paper. Please understand how to do it. But look, we'll check in on this next week and the week after, and we'll see how we're getting on. But I think it looks good, and I think it looks like a bit of fun. So I'm in. And guys, if you do decide to get involved with this and would like to support the channel, it is a 5% referral reward to the link that I will attach to the tweet. So if you do decide to get involved, it would be much appreciated if you did so through the link attached. Right, guys, it is a macro update time. So, quick summary from last few weeks. We think inflation has topped. We think oil is rolling over. We think rate prices have been priced in and actually have been overpriced, are going to come down. We think that DXY has topped, the dollar strength index. Ironically, right now, we are in a position where the gloomier the economic data that comes out, the more bullish this is for summer markets. Why is that? Right. Why that is because the worse the economic data, the more difficult a position the Fed is put in. Now, unless inflation peaks, the Fed will have an argument to continue with their rate cycle. We think inflation has peaked, and that is why we're watching oil so carefully. Without the inflationary pressure, the Fed then has the ability to pivot in terms of their interest rate rise schedule. And by that change, the market will then reprice, i.e. reprice interest rate expectation, and then move higher. That is the long and short of it. Obviously, the power is in the hands of the Fed. They could let the house burn down and not pivot, but 9 times out of 10, they choose pivot. So, what do we expect to happen? Let's start with oil. As we said, oil, 15 to 20% move lower last week. We've stabilised a bit, small green candle here, as you would expect after that sort of move. But I think these areas will be the peak of the summer cycle, so to speak, in oil, and we will continue to move lower. Next, DXY, Dollar Strength Index. I think here was the peak of the cycle, the summer cycle, and we will move lower towards this ascending channel. We'll test it, and if we are correct, collapse into the channel. If we collapse into the channel, risk assets will take off over the summer. They will explode. There's already a repricing that started over the last week across both crypto and equities, as we've seen really, really healthy bounces, which we predicted and which we DCA'd into. Next, 10-year bond yield. As discussed, we want to see this come lower. I think we've seen the peak. I think 3.5% will be the peak over the summer. We are now down at 3.13%, and I think you can expect to see this move down to 2.5% towards the end of the summer. I like to call it the Indian summer, i.e. a late summer, so September, October time. I expect it to be down at 2.5%, and the risk in the market, so the S&P 500, crypto, to have moved a lot higher. That is my expectation for the summer. Now, finally, let's go and look at the S&P 500. Let's go and look at crypto. So, SPX closed on Friday at 3,911 after hitting 3,650, I believe. That already is a very healthy move higher. The reason that has moved higher is the market is thinking and pricing the same that we are. They are looking at the data that's coming out. We had PMI this week on Wednesday or Thursday. The May reading was 57. The predicted June reading was 56. The actual data came in at 52.6. It's a humongous miss, a massive miss, and it gives you an idea of where the economy actually is. And it's in the gutter at the moment. It's in the gutter. We have ISM next Friday. It's a massively important number. Again, if we see that move lower, this is only going to compound the opinion that the economy is in such a state that the Fed will not be able to stick to such an aggressive interest rate rise plan, and the market will reprice that, and ironically, even though the data is terrible, it will continue to move higher aggressively. So, that's where we are. Let's go to crypto. Bitcoin. So, since the market bottom, which I think probably now is in, in terms of risk, of course we could see more volatility in the coming days and weeks. That goes without saying. However, in terms of this summer cycle, I believe that the cycle bottom is in. So let's have a look. Now, as this loads up, we're sitting at sort of 21,400. The reason I put this line on the chart is just for people who are looking to trade this. This is the sort of resistance area right now for Bitcoin. It has wicked up there a couple of times. So if we are going to see a pullback, it will be from this level. If we don't and we break through here, then we will continue higher. Personally, I don't really care. I'm not trading this on a shorter term basis. If we move lower, I'll DCA and again. Personally, I'm looking at this as a macro trade over the next few months. I expect, as we've just said, the indicators that we're looking at to continue doing what we expect them to do, and then this pivot to come from Powell over the next 6 weeks, 8 weeks, and then risk to keep moving higher. So the short-term moves don't really matter to me. Let's look at Ethereum, Bitcoin, because we looked at this last week and the week before, and we earmarked this actually a few weeks ago, this level as a level to look at Ethereum again. So obviously we broke down from here this 1 year trend line that Ethereum Bitcoin followed. Wise to get out of Ethereum here. And then, as we discussed, we put more risk on. We went from Bitcoin into Ethereum, and that has performed very nicely. Got in at 0.05 and 0.051. We're now at 0.057. Lovely move higher. It has outperformed. I think in this environment, if Bitcoin risk remains strong, I actually think we will continue higher again with Ethereum. That is on the broader 2 to 3, 4 month timeline. Just because of the strength of this move, don't be surprised in the next week or 10 days if we do come a little bit lower. But yeah, as long as our theory remains the same, then yeah, I think we probably move higher from this point. Anyway, that's it really. Let's keep the macro update nice, short and sweet. We know where we are. We know what we think. Inflation has peaked. Oil is rolling over. DXY has peaked. 10-year bond yields are continuing going to come lower. The economic data looks gloomier and gloomier. Keep an eye on next Friday, ISM. It is massive. Keep an eye on it. If it comes in poor, it just is compounding what we think is going to happen. If it comes in poor, I really do think markets are going to take off. Anyway, enough from macro. Let's get on to the gutter clone giveaway. So then, the winner of this guy, and he is a beauty. Twitter handle, Mr. Carl Ernest. Mr. Carl Ernest, congratulations, mate. Great for that. Welcome to the gutter if you're already not a part of it. Yes, please just DM me your wallet address and I will send this guy over to you. As always, it's 48 hours to respond, otherwise he will be re-rolled in the following episode. 48 hours to respond. Please ping me your wallet and I'll send it over to you. Congratulations, Mr. Carl Ernest. Guys, as always, it has been a pleasure. I hope you've enjoyed the episode and look forward to speaking to you again soon.